Hello, everybody. Welcome back to Face. Everyone doing okay? Bernard, Anthony, Antonio. Who else is in the house? Blake is back today from the edge of the universe. David Ogles, how are you? Hammett, Erna, you are always here. You're one of the first ones in the room. John Geiger, Stalin, Hitler, Kim Jong-un, all the dictators in the room. Good morning, Hamid and Jeff. Everyone doing okay? All right, let's get down to business. So I had one of my best turnaround Tuesdays in a while. I'd make another call on Wonderful Wednesday, but I don't think I could top it. Yeah, ping pong, and we have tennis, and we have volleyball. You're not the only game with a net in here. Hey, how are you, Stalin? I wish you were in power instead of Putin. Just kidding. You're about the same. Anyway, so yesterday Andre was on. Andre came in to fill in, and Stephen was talking about it. And when Andre was on, he had 78.6 back at 28.08. And I said, I'm already short, was short from 07 with a 10 handle risk. And I said, but Andre, my 78.6, it's 28.10, 29.10. So, everyone has different fibs, but look at the form here. 1, 2, 3, boom. Okay, anyone catch it? Because it was laid out for you for about an hour yesterday before it happened, so you had time to think about it. Well, everyone who caught it and is not a subscriber, that pays for your subscription for at least 6 months. Okay, so I think there's more left. Okay, I'm not in the bear camp as far as, we're going to wash out under these lows here. Not yet, but more looking for a correction of this wave. And then maybe we finally get the final blow off to 3,000. So that's the way I'm thinking. Everyone with me? Give me a Y. Something else that was discussed, I discussed early in the week. I said it was simply counter trend, which it is and continues to be, was euro pound up here in here on Monday. Okay, so it had one more rally, decent scalp, 50 pips so far. Not sure what to do with it now. As you can tell, euro is acting weaker than cable. Short term anyway. Here's euro. Also, you look at the euro, it still hasn't done anything wrong. I know it hasn't accelerated, and birthday boy Steve Volge brought that up yesterday. I said, aren't you concerned we're not accelerating out of this breakout? And he said, not necessarily. So all we did so far is come back and check it. It looks okay. So I think the guys at ForexAnalytix are going to get their breakdown in the dollar. Okay, so even though euro's underperforming cable right now, it still looks like a major breakout until we close back under 1280. And also earlier in the week, I was a little disappointed that the Mexico news came out because I was planning on doing something down here in US dollar yen. I may still have a chance to do so in the coming days. So we'll see. And, that all ties in with yields. And yields actually made a new low. On the way there, gold looks good. I think we're going to get a third drive up here. That again, like the yen. So like Steve said early in the week, I said, darn, Steve, I was waiting for a third drive. He said, well, it could pull back and still do it. And he was right. And we all know silver's done okay since breaking out of this, pointed to this falling wedge Steve added on his charts for, I don't know, about a decade. So still holding where it is. Gold silver ratio, I keep thinking it's going to peak. I want to take a look at yields before I hand it over to Blake. So I don't know if we're going to be able to squeeze out another low. It's trying to put in a higher low. And actually look at the 10-year yield, got back to the throwover line and was rejected there. Back inside this wedge, I think you have to declare at least a short-term bottoming in yields, okay? There still is a possibility if the yen washes one more time that we could get a wash here. And what could trigger it? What could trigger it would be, maybe another 40, 50 handles down in the S&Ps. That ought to do it, maybe back down to here, maybe only here. But anyway, I think you could key an S&P buy with a yen touch down at 107.60. And if the S&P call wasn't good enough for you to spend a little money and say thank you for putting on a free webinar for 2.5 years, this should be. And before I bring Blake on, want to do something. All right, everyone knows Blake and Greg and Stell. And you see this guy right here? Oh, he's a college graduate. He was an individual managing his family funds. Boy, are you? I want to ask Steve about how it is for him when he was trading family funds during a drawdown. Wouldn't that be an interesting interview? Okay, he progressed, went private. Look at this. He's a lover of sciences. And Steve's a Gemini. Okay, I mean later in the cycle, he's happily married. Okay. Oh, he's got cats. Should have a dog. Anyway, everyone join with me for my teammate and one of the best analysts I've met in the business. And guys, I've been in the business since 76. So what is that? 43 years. Happy birthday, buddy. Happy birthday to you. Happy birthday to you. Happy birthday, Nostra Vulgi. Happy birthday to you, and may this be the best year ever in all ways. Happy birthday for Steve. Happy birthday, buddy.
That was very nice, Dale. I don't know if he's in actually today.
He's not even in?
I don't know, but that was really good. Maybe you'll do one for me in August.
Yeah, just remind me. Anyway, okay, so he's probably out celebrating that he turned 50 today, huh?
Actually, probably celebrating that he's not doing analysis today.
Hi, Blake. How are you, buddy?
I'm good.
Tired?
I'm tired. Yeah.
I saw the picture that you were walking so much. I think your kids were pushing you around in a cart towards the end.
No. If you guys have ever done Disney, and Dale, I'm sure you've done Disney before. It's a beatdown. I mean, we did the magic hour, and we rocked the parks until midnight till we closed them down. And
what? That's a great name for face. The magic hour.
I don't, I mean, here's the thing, and I know it's, people take this for granted, but when you work from home, you don't really go anywhere. And so, putting that much, like, you go
Howard, Howard Hughes, Blake, I got a new pair of Kleenex boxes for shoes.
No, it really, it's quite taxing on your body when you don't normally go anywhere. And then all of a sudden you do this, you go walking for like, my wife, her, iWatch marked 30,000 steps on Sunday. So I mean, that's a lot of walking.
Yeah, yeah.
It really is. I mean, and that is actually taking a break midday, because what we do is and if anybody's ever done Disney during the summer, you know what this is like. We go in at 7 and ride as many rides as possible till about 1 or 2, and then we go back to the room for a couple hours and take a little bit of a nap, and then get up again and do from
Marathon.
5 till 7 or 5 till midnight at night. And it's a lot of walking, I tell you. My feet just aren't used to it, and like I said, you work from home, and so yeah, I feel a little broken body wise.
All right, buddy. Well, we had a little break in the S&Ps yesterday. I don't know if you're up to speed yet.
No,
but
I'm not.
Okay. All right. So maybe you could just go.
Oh no, I'll take over. I see that I haven't missed a whole lot, and that's the thing about the. Let me see here.
Yeah, when you're away and you come back, and it feels like there were things happening if you were here, but if you're away, you're right. Not much has changed. The euro's still hanging around. The wedge it broke and everything. So
yeah, I mean everything's still. And by the way, the euro, from what I understand, that we're going to be contained by some options this week. We do have inflation data, and I'll be here to cover it live, since it is Steve's birthday. He's not going to be here today, so and I am still playing. I actually, believe it or not, I got. Oops, I didn't mean to do that. Let me get back over to the euro here. I got filled on a euro bid at 113.10 on or actually 11 rather, on Sunday night. So I got filled long pre-market when we traded somewhere down here. I guess here's where we opened, and I actually got filled on this gap lower, and it was gapping lower. I got filled, and then we traded below it, and and here we are. We're just kind of trading up towards. We're still like you said, we're still managing a breakout here, and I'm not worried about it. And one of the reasons why the euro's under pressure today is you're seeing a lot of selling pressure come through the euro pound, and the euro pound's under a little bit of pressure. The pound's back up at this 127 50 level, and quite possibly could break out even further. So that might keep that pressure on the euro, especially given that there's a bunch of options expiring today at 113.25, and then at the end of the week at 113 the figure. So that doesn't mean that the euro can't go higher. It doesn't mean that the euro can't break out to the upside, but because there's so many options expiring between here and 113, this might be a week of just consolidation in the euro, regardless of all the the data that's coming out. I mean, hold on, let me move this over here really quick. You guys can't see that, but I had to move the admin thing. So we'll see if the euro can sustain these levels. I think it will. I believe that the dollar is, in process of, playing out this big double top. Obviously we're holding this trend line here, but break below the 200-day moving average, and the trend line should open up that downside move eventually to 95.70, and that's where I ultimately think that we're going in the dollar index. But again, the move that we're seeing right now has been very muted, and frankly, I'm surprised that we haven't seen any volatility. It used to be pretty common knowledge when I left town that we'd get some massive volatility, but it hasn't happened as of late. So I think I might have passed on that baton to somebody else at some point. But again, I'm looking at the euro, a move above the 200-day moving average here, which comes in now at 113. 65-ish. That should open up some upside. I believe that this descending wedge is still playing out higher. It just, we're consolidating and, working off some overbought conditions. You could see the 4-hour RSI way to work off some overbought conditions here, and eventually should reset and hopefully break out, to the upside. And that's what I think is going to happen. But we have to get past like today's data. Today's inflation data is going to be pretty key. And by the way, let's take a look here at the inflation data that we have coming out now. As I'm going over this, and here's the CPI, we're expecting 0.2%. Month over month, year over year, 2.1%. If anything comes in light today, that's could be the catalyst to drive us maybe up to 113.50. But like I said, I don't think that we're going to break out based on all the options that are expiring. We'd have to have a pretty weak, benign inflation data number to get us really moving. But Stelios, you've been here for the last couple of days. What's and I saw the cable moving a little higher a little earlier. We're not too far from the highs. Apparently, Boris Johnson was speaking a little bit earlier. What's the latest on what's happening in the UK?
Hello, hi Blake, welcome back.
Good morning, thanks.
Well, we're now well and truly into the part where all the candidates have started their how do you call it, their what's the word, their contention, basically. They're for the final 10 contenders, and Boris Johnson is by far the favorite, and he is also by far the most controversial one. And he did
extremely polarizing.
Yes, and he did say while you were away, he did say that he would consider not paying the $39 billion or pound, I think, bill to the Europeans in the case of when Brexit happens. So that stirred a few feathers, and Emmanuel Macron, yes, campaign is the word, Simon, thank you. That was a word I was looking for. Macron actually said that will be a case of the UK defaulting, which is probably not the case. But anyway, there's quite a few strong words being spoken already. And we were discussing Boris Johnson a little bit yesterday and the day before on this webinar. And, in the beginning, I always thought, oh my God, if Boris Johnson wins, it's going to be bad for the pound. He's unpredictable. You don't know what he's going to do. But then, having looked at all the other candidates, you look at people like Michael Gove or Sajid Javid and Andrea Leadsom and Dominic Raab and all these people, they are in a very similar mold to Theresa May, if you can call it that. But they're not somebody totally different in terms of character and temperament. And the more I think about it, the more in terms of the Europeans, if they're ever going to make a concession, I think it's going to be against somebody like Boris Johnson, because he's volatile, he's unpredictable, and he might actually scare them a little bit. I mean, who knows what's going to happen? But the bottom line is Boris Johnson is the favorite, and he's already saying quite a few things. And of course, we have to see who actually wins the succession after Theresa May. But yeah, he's the market. I don't know what the market doesn't know what to do with this guy. I think is he positive? Is it negative for the pound? There are arguments on both sides, so it's a
well, we haven't seen the cable break down.
Yes, but on the other hand, we've seen the dollar being a little bit weak in the last few days. So
True.
I think the cable is probably in line with the dollar weakness. But seeing Boris Johnson as the overwhelming favorite, theoretically, if you had asked me 2 months ago, I would have said, "Oh my God, the pound would have collapsed," and it hasn't. So I guess everybody's just waiting to see how he's going to handle it if indeed he wins.
Well, I think, technically, so, taking a look at the cable technically, this is obviously pretty key resistance. And I mean, we're only 25 pips away. Let's keep that in perspective, that, a move above 127.75 would frankly be pretty bullish, the cable, I think, technically. And obviously a move above 128 would be, that would kind of seal the deal. But if I was short the cable, I would be a little concerned. And is that a product of dollar weakness, or is that a product of pound strength? It's hard. It's as you pointed out, it's kind of hard to put your finger on it, because you don't know if it is more dollar weakness or pound strength at the time. But then the flip side of that is, if you look at the euro pound, and the euro pound looks like it will weaken from here, I would think. And these are drawings from last week, by the way. They're not, it's not anything current. We had this like little butterfly pattern that actually completed, roughly, 127% extension, something like that. We had this little butterfly that's kind of completed. I would think that, the cable is probably, at risk of a continued, strengthening. And if the euro pound breaks down, that's just going to be further catalyst to get the pound really moving higher. And remember, the market is predominantly pretty short the pound, and so that's, I think, between positioning. Maybe a lot of people have the same opinion as you, Stelios, where it's like, oh, maybe Boris Johnson, Prime Minister, might be more of a pound positive. And if anybody is short the cable, they're like, oh my God, I can't believe we're not breaking down yet. Maybe I'm going to be forced to cover. And so I think those are the risks that are associated around the cable right now. And frankly, I don't think I'd want to be short the pound. At this moment, it looks pretty firm, and it looks like it might actually continue here. Now, one of the other things that I want to point out, or I'd like to talk a little bit about today, is the dollar yen, because the dollar yen has stayed relatively weak. We got the typical turnaround Tuesday yesterday, didn't we, Dale? As far as equities go, I don't know if Dale's here, but if you see
yeah, Blake, we
got the typical classic turnaround classic, right? It was up Monday, sold off a little bit. We're starting to weaken again in the S&P. So, the dollar yen, still looks pretty vulnerable here. So, and you could probably argue that this is a flag pattern.
I think you could, yeah. Tempers my plan to buy it down there at 106.70 or so, but we'll see how it sets up down there.
Is 106.70 what you were looking at?
Yeah, it's a 61.8% retrace, and I had a line where it comes in there, but that measures much deeper.
Yeah,
I mean, it's a flag.
If it is a flag, and so I think you gotta be a little careful, especially looking at the inflation data today. If the inflation data comes in weak, we might take out the 108 level. And if we take out the 108 level, then you start thinking about the measured move of a flag could look something like. And I mean, it takes us down to 106.50, not too far away from what you were thinking of, the 106.70 area.
Yeah. Okay.
Of Thank you. 618. Yeah, sure thing. But I mean, again, I think with S&P is a little weaker, and with stocks are actually a little vulnerable here, that the dollar yen might come under a little bit of pressure. Now, I wanted to ask, because both you and Stelios would know this. What's happening in Hong Kong? Why are there protests in Hong Kong right now? Because I wasn't aware of.
It's a currency thing, Stel, isn't it?
No, the thing is, there's some new legislation apparently which is being brought in, which will allow extradition to China. Oh. And people are there. I mean, there's apparently 1 million people on the streets yesterday, and so that's pretty big. I mean, it is definitely something to keep an eye on, and something that the Chinese are going to be looking at.
Yeah, and Hong Kong is a very interesting
experiment.
It is, I've spent a lot of time in Hong Kong. I've probably
really?
spent Yeah, we had an office there.
Wow.
Wise Trade had an office there for years, and so I would go there and spend 2-3 weeks at a time. I've spent a couple months in Hong Kong, and it's a really, I would experiment is a good way to explain what Hong Kong is for China, and you know, I think it's a pretty decent barometer that could, you know, show China what social unrest may look like, and plus it's such a populated little area. I can only imagine if there's an uproar there, how
How
that
many
might.
people there? If there were 1 million on the street, what was that? Like a tenth of the population or something?
Oh, I don't know. I would say you know, without, you know, looking at, you know, Wikipediaing it right now, it's, you know,
I
probably
did. I just did. It's
it's probably
7.4 million people. So that's a
Wow.
very good chunk of them, right?
Yeah.
I mean, it's a lot of people. It's like Manhattan in a sense, you know. Manhattan probably has, you know, double the amount of people of Hong Kong, but the landmass is very small, so it's very concentrated. So yeah,
Yeah. Wow.
it,
Sardineville, man.
it is. It really is. It's kind of crazy. But anyway, so yeah, I was wondering what was happening in Hong Kong. Again, I've been, you know, I've been traveling. I was in Disneyland, Disneyville for the
You have a
last
Disney
few days.
hangover, bro.
I do. My feet actually hurt, and I'm sitting down and they hurt, which is crazy.
Dr. Schultz
Actually,
time.
Blake, actually, our friend Simon just said, and thank you, Simon. He said that this goes against agreement that the UK made with China when the Hong Kong was handed over.
Okay.
So that's why it's pretty big. Thank you, Simon.
Okay, so thanks, Simon. Let's take a look at. We're gonna take a look at the dollar yen. We're just a couple minutes outside of the. Let me launch data flash here. Move this over. Excuse me, really quick. We have inflation data coming here in just a couple of minutes. So, Stelios, what's your read here on inflation? What are you thinking?
Well, inflation has been disappointing pretty much everywhere. And core PCE, if you remember last week, was it, I think, came in 0.1 worse than expected. So my guess is if I had to make a bet on this, I'd say it comes in like 0.1 weaker or something like that. So it's expected, core CPI is expected to go from 0.1 to 0.2 month on month. I'd say it's unchanged at 0.1 or something like that.
So it'd be a little bit of, it rattled the cage if month over month we came in at like a flat number.
Yeah, well, I think 0.1 here and there is not going to make a huge difference, but yeah, I think for choice, I think it's going to be probably lower than expected.
And that's you know, one of the big hangups that the market has regarding the Fed is, you know, this weaker, if we have weaker inflation data, you know, is the market really going to see the Fed lower rates, maybe even quite aggressively in the coming months? And that's the risk that you have to the dollar, you know, long story at the moment, is that the Fed is going to have to actually be a little weaker moving forward. So let's watch the dollar yen here. We're let's see, probably about a minute and a half. Yeah, minute and a half out. So,
you know, Blake, you know, the interesting thing, sorry to interrupt, the interesting thing is that Fed fund futures are pricing 4 cuts within the next year and a half, and then the curve goes positive again. So the market thinks it's going to be a quick, relatively aggressive cutting, and then we'll go back to the usual hockey stick rates higher trajectory. So it's just quite interesting.
Yeah, you know, I wonder what they must feel then that this you know, inflation is or lack thereof is a bit transitory.
Yeah, could be, or it could be what we were saying as well, is that they will either need to cut a lot quickly or very little. So that goes in line as well, right? You're going to have an upward sloping curve afterwards, no matter which one of the two trajectories you get. Because if they don't cut, it means that things have actually stabilized and inflation is going higher. And if they do cut a lot, then the curve has to go higher afterwards, right? It's kind of like almost a done deal. Okay, so we'll have 5 seconds. Let's see.
This is Bloomberg right here. This is data flash. You'll see how.
Yeah, it's almost there. There you go, 0.1.
Wow. Weaker.
So let's see what the market makes of it. I think that's the first time in my life I'm right in a prediction.
So hold on, I only sold a portion of my cable here. I had a little bit of cable, so I gotta sell. What is that? God, that's
okay.
There goes
While
the
you're
yen.
doing that, I might take this chance just to talk about one other thing.
Go ahead.
So we talked about UK, and really the only other major thing that's been happening is, again, Donald Trump talking about the China deal, and he did say a few things yesterday. He said that the Chinese want to make a deal very badly. Those were his words, and that he was the one holding up the deal. And it's either we do a great deal or we're not going to do a deal at all, which is same kind of speak that he's been using recently. And the interesting thing is that he said that the US are looking for the Chinese to do certain things, such as curbs on subsidies for Chinese state-owned enterprises. So they want basically the Chinese to change the way they're doing their internal affairs, let's say, in certain things.
Yeah, good luck on that one.
Well, yeah, it's a tough one, but Donald Trump seems very focused on this, and he seems very he's digging his heel in. So it could work, it could not work. I'm not the guy to say if it's right or wrong, but he's definitely sticking with what he's been saying for the past few weeks.
I have one word to say: kowtow. It won't happen.
Yeah,
they won't do it.
Could be. I don't know.
Why should they? They don't even know why if he's going to be in office in 18 months. Why should they make a long-term deal with this guy?
Yeah,
that's a great point. I mean, a lot of analysts are thinking that China's just going to hunker down and just wait them out.
Their populations used to being poor. Let's see how the yuppies in their later years deal with some adversity.
And remember, there was one of the Chinese officials who actually did say on record. He said that if it comes to a stalemate and a really protracted end game, we can wait it out. He said that. He said our government will make sure we emerge the winners. So in that respect, they're probably right.
Yeah, they're happy. A lot of the population to have a bowl of rice at night. Though I mean, all of China has not been urbanized. Okay, so that there are ghost cities.
Yeah.
Anyway, I think it's a mess, and I think our president is throwing gasoline on a fire that he seems to enjoy. So get out your marshmallows.
And watch. I just want to say real quick. Watch this cable. It's been firm all night or all day basically. I think we are at a risk of a break higher. I don't think the euro is going anywhere, and I just sold off some of my euro that I bought, over the course of the last, I actually picked it up on Sunday. I just sold some of it, just because, like I said, I don't think the euro is going to, make much, get much higher than where we're currently at. We might trade up into the 50s, but I with all these options expiring over the next couple of days, I'd just rather be buying on dips and taking 20-30 pips out when I can. But the cable is at risk of actually I think breaking a little higher, and therefore as I was mentioning a little earlier, I think the risk of a move lower in the euro pound is quite realistic. Let me do a little bit better work here, like technically. Let me delete this. Let me delete that. And let's tighten these trend lines up a little bit. Let me make sure I've got. Let's make this is correct. Yeah, there's your upper trend line. Let me get rid of this one. Let's make it a little thicker so we can kind of visually see it. Okay. So lower trend line over here. It comes in pretty much at the spike low today, which comes in around 88.70, roughly 88.72 ish. Yeah, there's 88.71. So watch that. If that support breaks, then I think the cable might have a shot at breaking above this 127.7 or 127.70. So that's kind of what I'm looking at today. Like I said, I don't think the euro is going anywhere. I don't think the euro is going to be breaking higher despite the weak inflation data. I just don't think that we're going to make it much higher than where we're at. But it's the pound that we should be watching kind of carefully at this point in time. Looking at that dollar yen is a little weaker, but we have to break below 108 15 ish to get any downside movement. I'm surprised that the market's been so well contained. We are really seeing no volatility in the FX market, which is surprising. Going into the end of last week and seeing that dollar week move, I would have thought that we would have seen a lot more volatility come through the markets, but we're not seeing the Aussie dollars. I mean, look at these tight ranges. Holy cow! And this is me coming back and making observations after being gone a few days. So just this lack of volatility is in my opinion quite surprising.
Yeah, whenever you go away, the things blow up usually.
Usually do. And
pretty ugly candle on the US dollar yen 1 hour chart now, Blake. Looks like it's headed down there.
Yeah.
May not be a bad short here still.
It could be, but do you want to take a chance that this is the moment that you're gonna see this explosion in volatility? That's the risk, right? As you go, okay, well, I'm gonna take a shot on the market right now, and then what happens? You get just a kind of a flatline move. But like I said, I think the cable is the one you got to watch, because if this really starts breaking, into the 70s and 80s, then you're going to start to see like a little cascading movement in the pound pairs.
And that's a good point, Blake, because the DSI is showing more bearishness in cable than euro currently. So that means there's more shorts to squeeze.
Market, yeah. I mean, the market's the sentiment's been so sour on the cable for so long, and that's why it might be the euro pound that's the trade. Pound Aussie, pound New Zealand. These currencies have been beat down, and I know our traders specifically in our room love to trade some of these exotics, the pound crosses.
Show their room so people know that what they're missing.
Oh yeah, you guys, if you guys haven't seen all of us in the chat room, here we go. And by the way, this is how slow it is for me, as I actually you want to see all the here. Oh, we got all the charts that we talk about, and then all my pictures from Disney. Not all of them, but a few pictures from Disney. There's a few pictures from Disney there, but you can see Amanda. She posts a lot of charts in here, and speaking of which, she's looking at the inverted head and shoulder pattern of the cable. So same type of thing, 127.70. And that's a big breakout, that we might see there. And there's everybody in the chat room, Martin, whatever. But anyway, there is and just continuing on with us in the chat room. There's about 100 of us in there, and usually at all times it's about how many people are chatting around. So I'm gonna take you guys off Jumbotron. Hold up really quick, just making some adjustments back on my screen here. So let's take a look at that cable. So Amanda was looking at an inverted head and shoulder pattern. I'm not quite seeing it like she is, but actually that's because that was that was covering it up. So what she's seeing here is this. There would be the shoulder. There's your head. There's your right shoulder. Very symmetrical here. Neckline coming in right through here. I mean, this could be a big break. And again, you don't have to trade the cable. You know, you don't have to say, well, I'm gonna buy, the pound. You could be trading, use this chart specifically to cue off of, oh, here's the pound yen. And by the way, I had a pattern in play on the pound yen last week for a long that when we came out of that descending wedge, it just really didn't play through. But that doesn't mean it won't play through now. This one in particular, especially if stocks start to bounce. I mean, we could see a continued rally back above 141 in the pound yen. Like I said, these cable crosses or pound crosses like the pound Aussie, you actually have this possible double bottom, slightly higher low, which and if you've got matched highs here, matched lows, I mean you're talking a range, and a range here in the pound Aussie, if we're trading between 189 and 181, that's a 800 pip trading range, and you got plenty of upside to make it back up towards 188, 189. So there's the pound Aussie. Pound New Zealand, very similar type of situation. We've seen a bounce off of the 88% retracement. Here's the underside of this. This is very. This actually isn't drawn too well, and it's not. It's. I say that not because of my drawings. It just hasn't been technically hasn't traded as clean as some of the other pairs, but that doesn't mean we can't get a rally back towards 196, 197, and test the underside of this trend line here. So again, you don't have to trade the pound dollar per se if you want to just remove the dollar out of the equation, but you have, some of these pound crosses that might, look a little bit more attractive to trade. One of the other things and Dale, you mentioned this a little bit earlier, and we're gonna have to take a look at it again today. Is look at the bond market. I mean, what you've had a lot of guests come in over the course of the last since I've had a chance to chat with you about it over the last couple of weeks regarding the bond market and this move that we've seen in bonds. What are some of your guests that have been in here on the Face webinar as interviews? What have they said about the bond market move, Dale?
I've noticed besides Jamie Satley, when we were at 124 or in the TLT, and he was very constructive, a lot of people really not paying that much attention to it. I personally, I'm looking for, if the yen's going to where you're talking about, Blake, I think there's a potential for one more high. But as you can see, if we get one more high, there's going to be a lot of negative divergence. It's already building on longer time frames, short time frames, but not longer time frames. So I'm looking at the yen and the bond market being really closely correlated the last several months. So I'm keying off 133 or so in TLT because I don't trade bond futures. I trade an ETF for that. And keying off the yen at see if it can hold 107.60-ish. And I think there's a short coming here. I will say that Jim Welsh is also looking for the same thing in June, and he also had that target above 133. And I really respect Jim's work because he started off really being a Fed watcher. Okay.
So wait a second, really quick. So Jim's looking for a move in the 10-year up to 133.
TLT.
Oh, and TLT. Let's see.
Okay, so he's already a toe in the water on shorts because he thought with this pullback that we had, this little pullback would be a 4. But he's actually looking for yields He thinks that yields are so mispriced, and not necessarily because of the Fed. I forgot his reasoning. Makes my head explode. But he actually thinks that the bonds, with the chart you have up there, are going to retest last year's lows when everyone was freaking out about, what was it, 320 yield on the 10-year. So there could be a major bond short setting up here. And I think that would tie in with a weaker dollar, don't you? Why, what's a bond? It's like Steve says, it's a promise. And if, you're right, the team's right about an important breakdown about to occur in the dollar, I don't think that's constructive for dollar denominated assets. So,
so you think you think that then you're thinking a rise in yield is not going to have any impact in the dollar.
Well, the dollar was acting pretty good with yields dropping for a year now.
Yeah, one of the things, and if you you could go back a couple of years and and listen to some of the comments that I made regarding U.S. assets in general. One of the things that would scare me as an investor especially the equity markets, is if you see a full-fledged selling of U.S. assets, that is tied in with the dollar, the bond market. Right. And if I own stocks and I saw the dollar come under pressure and I saw bonds come under pressure, regardless, I'd be a little nervous.
That's what I think is going to happen.
So do you think it would be more of a loss in confidence then?
Yeah, loss in confidence. Maybe even loss of confidence in the Fed. Maybe they'll change their tune again. It seems like they're kind of being a marionette to the S&P. So, we'll see. The market's already pricing in a couple of easings. Yeah. And if that doesn't happen, the market's way mispriced for where it is up here. And although I'm looking for a new high in S&P's mid-July, some cycle guys I follow and stuff, we're going to have this pullback, one more shot up, and that might be it. And I think bonds, just like bonds and stocks have gone up together, they can go down together.
Yeah. Okay. Well, that's going to be that could be a pretty interesting dynamic. Now, looking at the bond market though, what I would be most concerned with if I was short the bond market, which, as you mentioned, like Jim Welsh is, currently in that camp, is I would be, really concerned that we've got a, nice, flag developing here. This is just, it looks like a consolidation continuation move higher.
Yeah, he didn't think the final high was in, but it's you and I and most of the people here listening to us, we mainly trade leveraged stuff. But when he's making these recommendations on ETFs, they're more forgiving. I'm not saying you won't go through a drawdown, but you're not going to blow up your account by being early.
Yeah,
know what I mean?
Yeah, good point.
Yeah.
No, hey guys, just a little heads up. If I don't know if you guys are watching the euro here, look at the reversal. I mean, we were trading up into the 113.40s. We're getting slammed right back down again. I mean, this euro's got nowhere to go, and I think that it has to do, with all these options expiring. Matter of fact, I'm going to pick up my euro right again. I just picked it up right here at 113.16 just a second ago. I just bought it right back down here. I'll trade this range for now. I still think that the dollar is breaking down eventually.
1280 is my line in the sand for euro.
Yeah, I don't mind if we drop back, towards 113.
Yeah.
I don't at all. I don't know if we're going to make it all the way back down there, but we'll see. But I just picked it up down there on that dip, and I'll continue to buy it, as we are down around these levels here, 113.10, so
all right. Well, we do have
got nowhere to go right now.
We do have an interview today, bro. So
who's coming in?
At Westpac Glenn, and he's got some macro stuff. I found him on Twitter, and actually, I think he was a request of some people that I interview him. If people are interested in having me interview someone that they find interesting and compelling, you could always just message me on Twitter and I'll extend an invitation. So we've gotten lots of guests that way. So the community is kind of like, I don't know, they gather intelligence by going out and recommending people that we could bring into face. It's pretty cool.
And that's one of the best things about being in a community. Like for today, I'm gonna be leveraging all the trade ideas from our chat room, because being out of
you're
it,
coming in cold.
I'm coming in cold. I'm not totally up to date and up to speed on all the moves that we've seen in the markets over the last couple of days. So, these guys are all queuing off of a lot of the cross rates. So I'll probably be, looking towards the towards our community to find some decent ideas out there, other than just playing, the dollar on the short side, like I'm, just buying a little dip here in the euro. But to see some of those the crosses, I find a lot of my trading opportunities right from our community, and that's one of the best things about being in the community in general is just being able to do that. Now, real quick, let me just take a quick look at the dollar index and take a look at the S&P before you bring in your guest. And I actually want to look at not only the S&P, I want to look at some of the other markets as well. Some of the other equity markets. So here's the dollar index. The dollar index, we sold off following the number, and here we are bouncing back. Pretty aggressive bounce in the dollar index, surprisingly. And let's go over to the daily. And I know I mentioned this a little bit earlier. This is that trend line, the 200-day moving average. It's all very, very key. And here's your double top. And the double top still plays to the 95.70 level, which I eventually think that we're going. Doesn't mean we're going to go necessarily right now or today, but I think that's eventually where we're going. So I'm willing to sell rallies in the dollar index. Any rally back up towards 97. It's that's for me is I look at it more as a gift from the FX market. If the dollar ends up moving back up towards 97, I'll just look to sell. But there's the dollar index. Let's take a look at the S&P. The S&P now, Dale, you had mentioned a couple of your guests think that we're going to hit a new high in the S&P. I'm still in the camp of this big double top, trying to form. I'd like to. I'd rather than assuming we're going to hit new highs, I'm more of the camp that I'd have to see it to believe it type of thing. But we've had a nice move off of these lows. Let me see if I can do any work here.
So maybe what we're going to do is correct this recent pop that we've had, Blake. That's what they're thinking. And I think even Andre had target. Yeah, correct back. And then you're right, one way or the other. And a lot of people looking for 30, like Henrik, I don't know, 30.25, and I've seen that number before. And a guest I had on who's a real big cycle guy is looking for the most significant turn of the year in mid-July. So that would be enough time. Yeah, so that'd be enough time for it to work off some of this and then grind to a new high. And isn't that the Fed meeting in July?
Stelios might have a better answer on that.
He's gone. Yeah.
He's gone. Did he leave already?
Yeah. He's a part-time ballerina, so he's very disciplined. He put his tutu on and jumped in the car. Anyway,
so our next meeting is going to be mid-July.
Okay.
July, but it's actually at the end of July. So
end. Okay.
Yeah. All so right. We have a meeting next week, and then the end of July. Maybe that'll be the catalyst that drives us. So we'll see what S&Ps do here. I would not be chasing them on the long side here. No, not me. No. Not after this move that we saw the last couple of days. And actually, I know Steve had a really nice long
cover down there.
Yeah, did, and he was long. I think on just around the 200-day moving average, and played that beautifully. back to the upside. So, but let's take a look at some of the other markets too. Let's go over to the NASDAQ. NASDAQ has actually been performing quite well. The Dow, the Dow is actually, this is one of those markets that actually has been trading quite heavy, and
yeah, no new highs.
No new highs, not like the S&P, not like the NASDAQ. So I think if we're going to see any, relative weakness, it'd probably be here first, in the Dow. Let's take a look at the Nikkei. I haven't looked at the Nikkei in quite some time. Yeah, this is really underperforming. Matter of fact.
See, what a lot of people are saying is that the Nikkei can take out the low from December, January, while the S&P's put in a higher low.
What I'd be really watching carefully, especially if you're trading the yen, is obviously you're going to be watching the Nikkei, but the Nikkei below this 20,000 level would be I think a pretty bearish event for the Nikkei, and it'd be quite bullish for the yen if we should do that. Now, one of the other markets that's been really weak is crude oil. Crude oil has been surprisingly weak. What do you make of that, Dale?
It's hard to get short down here, but a lot of the bears are looking for January lows to be taken out in this as well. But yeah, you can't. I mean, after what was $16 break in a few weeks, hard to short it down here. But 57, 58 on any rallies would be, I think, a decent shorting.
I think that would be the gift, right? If you could get a rally back up to 57,
or wait for the S&Ps if they can generate a new high in July. Look at where crude is, and my bet is even if S&Ps do make new highs, the crude will make a lower high off this break, and that you short the weak sister. So that's what I'm thinking.
Got it. Yeah, I could see that. So real quick, just a bit of an update here. The euro, again, we are really contained. I don't think we're going to see much below 113, and we're not going to see much above 113.50. Might even be through the remainder of the week. So again, I'm a buyer on dips in the euro. Like I said, I picked up a little bit more down here at 113.16. I sold it earlier this morning up in near 40. I don't mind buying dips like that and just kind of trading this range. We got to keep an eye on the cable. I think the cable above this 127.70 is going to be very bullish for the pound. I don't know if the break is coming necessarily today, but if it does, if the pound does break above the 70s, then you got to look at the euro pound as a short, pound Aussie, pound New Zealand as possible longs, pound yen, especially if equities bounce. I think that might be a play. And looking ahead really quick, I think we have Australian employment tonight, right? Yes, we do. We have Aussie employment tonight, that's going to be a mover. And so that you have to think about that if you're trading like the pound Aussie. But take a look at the Aussie dollar. Big failure at 70. So in order to get the Aussie really bullish, we'd have to get back above 70 cents, and a move above 70 cents would, in my opinion, would be very bullish for the Aussie. One of the things that I have to point out here is, despite the ongoing China US trade war, the Aussie actually has been holding up quite well. And the Aussie has been extremely weak for this last roughly year and a half or whatever, ahead of probably with a good understanding that the China US trade war was going to continue and wreak havoc on the Pan-Pacific area. But you're starting to see the Aussie diverge away from that, and if there's anything that maybe is suggesting that we might be past the worst of the U.S.-China trade war, and things might start to get better towards the end of this year. Again, thinking ahead, thinking that we do have, we're heading into the election cycle here in the U.S. Donald Trump may want to try to make things a little bit better with China sooner rather than later. You know, like I said, the Aussie is already outperforming, and it has been for the last few weeks. So just watch the Aussie. If we break back above 70, I think that'd be a pretty bullish event for the Aussie. I don't think today's going to do it with data, but you know, it is possible. So with that being said, Dale, I'm going to pass it back over to you. I hope you have a great interview with your brand new guest. And I want to thank everybody for being here with us today. Make sure you visit our sponsor. Our webinar sponsor is Forest Park FX. You can get to them right here on the ForexAnalytix site. Remember, they are here to help you find a broker that's best suited for your needs. You can get to them right from the Skype address, or this email right here goes directly to Forest Park FX. You can be part of the ForexAnalytix community, you know, and be in our reimbursement program. So potentially your trading commissions can help subsidize your subscription with ForexAnalytix. Or if you're in the US and you want a cashback rebate, you can do that as well with Forest Park FX. So
welcome back, Blake.
Thanks, man. And I'm going to go ahead and let's see.
You don't even have to pass me the screen. I'll just make him the panelist.
Okay, sounds good.
Okay,
right,
buddy, good hunting. And, you know, now you know how Fred Flintstone felt having to use his feet to brake and run his car.
All right, guys.
Buddy.
Thanks.
All right. So Westpac Glenn, if you first don't succeed, try again. You're now the presenter. Waiting to hear your voice, see your screen, buddy. Let me see if I have you muted. I do. Should have your voice. Waiting to see your screen. Hello, Westpac Glenn. Welcome to Face. Remember, hover the mouse around it. Yesterday, you were at least able to show your screen right away. You with me? So you just hit share to show your screen. And if you want to talk to me, you could talk to me in chat. Let's see if you're trying to communicate with me. Okay, I don't know what's happening with you, buddy.
For that, you hear me?
I can hear you now, yes.
Okay. Now, all I see is the screen to Blake Moreau.
All right, click the share.
Click the share. I don't see a share. Where do I see that?
At the bottom.
No,
okay.
I see a DMAR video. I see a mute. I click on the little button next
to
me.
Go to the right.
Okay,
and you'll
I'm
see
at the
participants, right. QA, share, chat.
No, all I see is participants, QAR, partager l'écran. I click on that. Okay, écran 1. Yeah, that's it. I put écran 1, but my stuff's not coming up, huh?
Okay, I'm gonna.
Yeah, you got it. That's it.
Yep.
Does it look good?
Yep. Got it.
We're good. So how are you? You finally maybe get this to work for the first time? I'll bring that up.
First time for you.
Yeah, well, let's give you a little bit of time because I usually don't like to speak. I'm pretty private with my stuff. Pretty private. Because
okay, why? FBI looking for you?
No, it's not that. It's insane cutting edge. It's insane cutting edge. Nobody's doing what I am doing, basically. And that's not the
Nobody's doing what?
Nobody's doing what I am trying to achieve with the Stream project.
Okay, so your stream project, who's the band?
Pink Floyd. You see them on the
Oh,
screen.
wow, yeah. Okay, great show. So
let's put a bit of that on you. A little bit of the Machine.
Yeah.
I love that. Because the stream takes a little bit after the Machine. In the sense that I love Pink Floyd because I really think their music was so cutting edge and so beyond everything that my idea was to try to take market analytics beyond this. This is good. Can you see my screen?
Yeah. That's
okay.
a B chart up here. Oh,
Yeah,
the industrials.
okay. So,
yeah. Okay.
Okay. So here's an industrial chart, but this is basically what everybody uses, huh? RSI, MACD, 14. We put in a 50, 200-day moving average, all the stuff the quants and the crims love to rob the pockets of the public with. Doesn't work. I laughed a little bit about you guys and your predictions of where the S&P is going. You guys are fully wrong. And where the dollar's going and where the 10-year is going, it's all wrong. Sorry. Maybe I'm wrong, but I don't think so. So let's start with the first chart.
Okay. I'm ready to make $1 million. Tell us what to do.
Well, no, it's not so much that. Let me just finish before we start on the charts because I don't want to spend long. I only got a half an hour, a lot of material to cover. But the Stream project was basically taking Elliott Wave, taking Gann, taking what Richard Russell did, taking what PQ Wall did, taking what Hertz did, taking what Lindsay did, all these gurus the last 100 years, and taking what they did and trying to take today's software and not use, everybody's got to use fib in that, but I'm a big picture guy. I'm more of a swing trader or a long-term trader. I don't like playing the pennies day to day. I don't do that. It's not my cup of tea, and it's not my membership base. That's not their cup of tea because those my membership are retirees or people working. They want to put their money into a trade, stay with it for a month or two or a week or two, and they don't have time to be sitting there at the screen and be in and out. So that's kind of my focus to start with. So first of all, when you look at the market, let's start with this, Aftermath. You notice that name? What is a new book that just came out called Aftermath? Mr. Rickards just published a book called Aftermath. So
hold on. I have to run to my ATM and make sure that there's still money in it.
No, let's not talk doom and gloom. We'll get to that in a minute.
No, that's Rickards.
But that's Rickards. But
Rickards. I go every day to make sure the ATM is still working.
Yeah. Well, no, I don't personally.
Don't you?
Yeah. No, but let me tell you something. Personally, I don't like Rickards. But I just want to show you this model because I think we're probably going to have to come back a second time to finish what I got to talk about. We're not going to have the time to go to the 40 models I've got ready for this talk in a half hour. So let's go quick. You can see here we started in 1929. We had this number one top, right? Right here. You see it?
Yeah, I'll see your cursor.
Okay. So we had the Fed Reserve created in 1913. And what this became, and I don't know necessarily if it was the plan of the Fed when they had their meeting, because really this cycle started before that meeting, maybe in the early 1900s. And so what this became, you have to think cycles in everything. I don't care what you look at, whether it's markets, whether it's gold, whether it's the dollar, whether it's commodities. And I'll show you some of that cycle work in the dollar. It's amazing stuff. But this became what in a sense, I call the Federal Reserve cycle. Because you can see the Fed was created. We had this wave one up into 1929. I'll let euphoria, dancing fun. And then we had this collapse, right, into 1932. So think about it. That collapse was just a wave two. That's all it was. And then we took off into this massive wave three that is still ongoing. We had a wave one, a wave two, a massive wave three. And I'll show you in just a minute if we get time that actually the 2000 and 2009 crash were not crashes, yet merely corrections of the wave four, an A, B, C type correction in this cycle. And now, right now, since 2009, we are in a wave five up. Now, when this wave five finishes, that will be a three top, meaning we have a wave four down, and it's going to be, like Henrik talked about, a depressionary collapse. He is correct in that. We are facing the depressionary collapse, and it is going to be evil.
Do you think three is complete, or there's one more push to new highs?
It's not complete. And let me go on a few other models. I go here. Let me show you this because I think this is. We're not going to have a lot of time to get. Maybe we can have more meetings. We can talk. I like short-term stuff, trading stuff.
Well, I'm not asking you anything here short term, Glenn.
No. Let's look at this. Let's look at this. This is a guy by the name of PQ Wall. You know PQ Wall?
Yeah, I remember him.
He was a personal friend of mine. You know, I've been in this game probably longer than you, 35 plus years.
How old are you?
I'm getting close to 60.
Oh, do you have a 1 foot in the tar pit?
No, I look really young. I've been a vegetarian all my life. I take good care of myself.
God, I mean, you're.
Anyway,
I'll tell you, you've already won. You're the most wonderful person I've ever interviewed.
Oh, I don't believe that. Maybe when you get to know me a little more, you'll like my stuff. But anyway, let's look at this really quick. This PQ Wall model, and PQ Wall created the wall cycle. Imagine having a cycle named after you. That'd be pretty cool, no? So a wall cycle runs 4.5 months, which is 1, 2, 3, 4, 5, 6, 7, 8, 9. They're 4.5 months in length, into a kitchen cycle. Mr. Kitchen created the kitchen cycle. It's about 4.5 years. And that whole thing makes up what is called a normal business cycle, which normally runs 10 to 13 years. But, you know, we're more 10, 11. So if you can see here in this first parabolic dome, right? You see it? We should have topped right here.
If you want to save time, you could stop asking me if I see it because we see your cursor.
Okay, no, so right here, we should have topped in 2015, 2000 or so. The Bernanke blew it. They should have cut QE way back here, you know, before this top arrived, and they would have had a normal business cycle correction to about right now. The damage wouldn't have been so bad. Would have been a normal business cycle high, normal business cycle low. Instead, we had this stupid Yellen and Bernanke. I don't know why. Maybe it's part of their plan. You know, I think everything's planned by those guys. Instead, they kept printing QE, and now we got this massive blow-off top ongoing, which becomes an extended kitchen, which is going to lead into a mega crash because they pushed the normal business cycle out, an extended kitchen, which is quite a few years extra. And I don't even think we're going to see the low in the markets till 2024. That's my idea. Now, let's talk about money supply, because really it's all about money supply. And you can see here the pink is the MZM, which is the overall, the broadest component of money supply. And the blue behind it, where you can see the shadow, is M1. Of course, they don't print M3 anymore. And I think in a few more years, they probably won't even print this anymore because they don't want you to see how exponential, since they took us off the gold standard, money supply has gone. It's all about that.
You mean publish, not print, right? Publish.
No, they won't publish it. They won't publish this information.
Well, you said print.
No, I mean publish. They won't publish the money supply data at some point.
Just trying to clarify for our audience.
Yeah. Well, look right here, this red line. This is the SPX. So you can see that we went massively above the money supply until the year 2000. You can't do that. We corrected back into 2003. We didn't quite get to the level of money supply. We had another blast off. And then the correction in 2009 only took us back to the level of money supply. What correction? And off we went again, following up the money supply. That's it, okay? So then we go here. This is another model I'll talk about. This is a very important model. We're gonna run out of time. Maybe I'll jump off to my dollar chart since you guys are Forex related. But anyway, this is a model that was created by George Lindsay, one of the smartest, most intelligent traders in the last 100 years. And what you can see here is this model. You have an A, you have a B, you have a C, you have a D, you have an E, you have an F, you have a G, H. It's basically called the J equals M equal A model, okay? The problem is when you arrive at the J in this model, on the other side, which I've covered up here, is a crash wave. It's gonna happen based off of the most brilliant modeler. And his model for the last 15 years has absolutely projected the high in the market. And actually the high in the market should have been in 2018 based off this model. So you can see we hit this high right here. And now we've had this Fed games. They're still playing the games to try and stop this from happening, but it'll happen. It'll happen.
So let me ask you this: it should have peaked in 2018.
Yes.
And you didn't know in 2018 that it wasn't going to peak. So well, I'm assuming that you thought that was the peak. How did you manage your risk to know it wasn't the peak?
Well, you see it reach that point.
Because you know what, Glenn, everyone could talk about yesterday's newspaper.
Yeah, but yesterday's newspaper is everything. You see on my site, no, let me add. You see on my site, I got that Einstein quote, study the past and you will know the future.
Right.
That is so important. So let's go on. That is so important. Let's pass some models. We don't have a lot of time. Let's pass some. Okay, I've created a model I call noise. You see, I call this noise. And you see right here, this is the SPX. This is a line here. And these lines here, what I call noise. Now you see back when we had all those problems in the market in early 2018. See all that noise? And again, here in the October period, we had a ton of noise. And since then, no noise. The market is quiet, which tells me what? Don't be a bear. All right, let's take a look at the yield curve. I think the yield curve is insanely important because the yield curve is called the 2000 and the 2009 crash. And of course, the yield curve has started to move down. So that's not a good thing. But in a way, okay, is it topped? I don't think so. I think the yield curve is just going through a trend sideways. And I think.
So you think we could get some steepening again here?
Yeah, I think it's going to steepen back up. Let's actually jump to the 10-year note because I think that's really important. I was working on that a bit today for this report. So let's jump. Oops, shoot. What did I just do?
You unshared.
Partially. Oh, yeah. Okay. Sorry. How did I do that?
So you just have to click share again.
Yeah, okay, I'm there. Okay. Yeah, because at the top, I can't get to my models for some reason. I got your little bar up there. Okay, here. Let's look at the 10-year note. Long-term model going back to 1968. Okay. So we started because you guys were talking about the 10-year note and you're totally wrong on it. I think it's important to understand.
What did we say?
Well, you said that, but you said bonds were going to go here and everybody doesn't think can bonds go to negative yield, right? So, we started this big bond bull here in 1981 and we've just been in this continual downtrend. And you can see right here, we started this big downslope. Now at the bottom, we've got this three.
So you don't think it's possible for a 10-year to go back to 3% before we go to 1.16?
It's going to 1.16 first.
So do you think it could be it could rally back to 3% before that happens?
No, I do not.
Okay.
The top was in right here. This was the top.
3.25.
I mean, we could have a little. Obviously, we're not going to go straight down to this. We're going to have some bounces on the way down. But we are now in a massive move down, breaking this channel. We could go negative, but my model is showing 1.16 should hold. I mean, Germany just went negative. They joined the Japan club. I mean, that's all a bit scary. We talk about another day, because if Japan just goes to 1% on the upside, they're broke as a country. I mean, it'll consume every single penny of their revenue at 1%. It's insane to think that. So I think the U.S. will not go negative, but it will definitely go 1.16 at the low. And I mean, it's hard to project that, but I'm thinking next year it might even extend out further. I mean, the window is pretty much 2020 into 2024. That's the hot period. On the other side of that, oh my God, we're talking inflation, new gold cycle, new commodity cycle, and massively raising rates. It's going to be chaos in the next 10 years. And if you look at the 10-year right now, okay, here's a model I did today. I put this big X through it because there is nothing technical in the model going all the way back to when the 10-year began tracking data. Nothing's in play in the model. The only thing that is in play right now is this one channel here. And that's why I said I think we're going to bottom here at some point in the mid to latter part of 2020, because there's no data you can draw out of the model forward than this point. Now up here, we topped. I didn't draw into the model because I put it in the long-term model. I call this a magic box top. A magic box is a model I created. It's my own creation. I've created a lot of stuff. You see these lines all go into the model. My models are all really mathematical and they really try to draw, even though I use stock charts. I hate it, but I use it because my member base, they all use it. So I got to be on the same platform. I used to use eSignal, all that high-tech stuff. But I think for drawing models, I really like stock charts. But anyway, the only thing in play, imagine that, of all the data going back as far as the 10-year note goes, is just this one channel. There is nothing but this channel, this lower line here, nothing else. So I think we're not even going to leave this channel. I think we're basically going to come down. We might bounce back up here in the channel, a little bit, back up a bit, and then we're going to work down, and we're just going to bounce down this channel. It's going to go nowhere. I mean, the 10-year is going lower. Forget making too many bets on the long side. I mean, that's my thinking, And the dollar, let me go quick because we're going to run out of time. I mean, we could talk Bitcoin. I put that. Let's look at gold real quick. Because I really like what Hendrik said about gold. Hendrik is 100% correct on gold. We have topped. I think in the coming correction we're going to have in the S&P, which is going to last into probably the end of July, we're not going higher, we're going lower. I think gold is going to potentially move down, and it's got room to maybe make one last move up just above this old high. I don't have it in this model, but it still has room. So it's still going to bounce around. And then once we hit the low in the markets in the coming 2 months, then gold's done. It's heading down. And yes, it is going below $900. I don't care what you people out there think. It's going to do that. It's a wave 2. It's an ABC, like Henrik said. Gold cycles run 64 years, people, okay? The gold cycle, the wave 1, was the 2000 to the 2010 top.
When's your low due for gold under 1,000?
You can back up the truck at gold. My price target on gold is around 840.
Time-wise?
Time-wise, I think it's going to be a quick move down. I think it could bottom well before the markets. I think in early 2020.
Okay.
And yes, it could be a back up the truck moment, but remember the wave 3 is going to take a long, long time to move above the old highs, because the top in gold is not till 2064. At 2064, gold will be trading probably near 10,000. But you and I will be long gone, maybe even our kids.
Do you think there's a shot for the gold-silver ratio to turn on this move, or because you're bearish on the economy, silver will continue to underperform gold?
Well, yeah, silver will underperform. Silver is something I wouldn't even be playing with right now, because there's just there's no need. I mean, I like to look at Indo-gold ratios. Maybe if we can go quick here to a Bitcoin chart, because I laugh at the Bitcoin people. People, you got to look for value. Nobody even talks balance sheets anymore. I get so tired of that being old school. Let's just jump to a Bitcoin chart. All right, here's a timing model for Bitcoin I created. And I really love it, because you can see here on this oscillator, look, here's Bitcoin, oscillator moved down, flat line, oscillator moved up, with that little move down, up, down, up. It was just trending, it was trending down. And then we had this really big move up off that low, and the mono rest bullish. And everyone says, well, why did Ethereum do so well? Well, you can see this red line right here. This is Ethereum. It was massively oversold compared to the other Bitcoin products, which you see up here. So right now the mono rest bullish. But let's go here. This is what I call the Bitcoin to gold ratio. I think it's very important. I mean, only a fool held Bitcoin at the high. I mean, 14 ounces, almost 15 ounces of gold to 1 Bitcoin. I don't know about you, Dale, but I'll take the gold.
You ever look into lithium? Anyway, listen, I want to ask you this. If this ratio is going to go to 1.174 and gold's going to 800, what price level would that take Bitcoin down to?
Well, that will probably bring it below that, because my target low is below. But I really do believe that Bitcoin has to trade pretty much on parity with gold. Right now at this last high, we're at 6.76. And I tell people, look, if you're going to trade Bitcoin, set up a chart like this that compares it with gold.
Okay, so Bitcoin and gold will be $800 eventually.
Well, yeah, I mean, if you want to time the low in Bitcoin, time it with gold. I mean, there's no question. I mean,
interesting. So that's a correlation to you. Gold and Bitcoin correlate.
You have to look at correlations. I mean, other thing.
Well, I do, but I haven't. I learned something from you, so you believe they're correlated.
Yeah, and the other thing that really correlates, I think everybody's missing the boat. And let's go here to Japan, because Japan's such an important issue in this whole thing. You just had Trump in Japan. Well, I think he was there begging the Bank of Japan to continue printing the $1 trillion they're printing every year, because they're still printing $1 trillion. And it is the only thing right now that's keeping the U.S. markets afloat. But, nobody talks about it.
So what's your downside target for Bitcoin?
You look at the downside. Let's go back to that. I'm thinking, it's going to go a long way down.
You have a price?
1 point.
Rather than just a description?
Oh, a price. Yeah, I didn't look at it. Below 1,000.
Below 1,000. Okay.
Yeah, below 1,000. I could pull up.
That's a big area. That's a big area.
It's big. I keep clicking on that. Hang on. Because I wanted to show you real quick. We were jumping around a bit, so it makes it complicated. But anyway, I wanted to go to Japan, because that's really important. We just did what I call a magic top box 3 top in the yen, which is right here. And now the yen is going to drop from 92.78 down to 88.65. And that is going to hammer the stock market. And that is going to end late July. I've got a window out into August. You know, it's kind of hard, but right now I'm kind of projecting. I'm projecting the Fed meeting at the end of July. And I laughed at your other guy. Said, "When is the Fed meeting?" Well, you know, I keep a calendar above me. Every Bradley turn date, every Fed drain, every Fed meeting. As a trader, you have to do that. I mean, so we've got that Fed meeting coming around the 30th of July, and that's a very, very important timeline in the market. I think that's where we're going to see the lows in the market. I think that's where we're going to see this massive low here in the yen, and the yen is then just going to take off.
Why laugh? I have an important. Why laugh at anybody?
No, I'm not laughing.
Well, if they're well, you just said you know.
Okay, I don't mean. No, I just don't.
I mean, really, where did you come up with this attitude?
Well, it's not an attitude. It's just that
It is.
You have to know when the Fed meeting is. You have to have that in your trade.
Okay, well, you could say that instead of laughing at people, right?
Okay, I'm not laughing. I don't mean it like that.
Yeah, you did.
Right now, the Fed.
Know thyself.
The Fed meetings are probably the most important thing there is out.
Okay. All right.
It's so important. All right. The yen is going lower. The yen is going to drop. Yeah. It's going to take down the markets with it. It's going to take gold down with it as well. And I think gold is going to at some point come on. Now let's look at the dollar just real quick. I think there's a forward chart. You're a Forex guy. Now the dollar is a cyclical thing. It runs in 10-year cycles. As you can see in this model. So we go back here to this period of like 87 and 97. We had this 10-year. You see this 10-year bull here? Uh-huh. Bear market of the dollar. As you can see how it reacted here in the 10-year period. Very bearish. Then we went on the bull run. And it took off. Back down to came. Another bear bull right here. Right now, we're in that same. So these are basically equal timelines you see set up on the model. Right now, we're just getting close to finishing off the bull market in the dollar, which in my opinion will top at 99.28. And then we're going into another bear market. And I have not disclosed that, but you can see this red line dropping down here. It's going to be a massive dollar crash.
So is it a general flow except for bonds out of dollar denominated assets once the dollar peaks? Yeah, and your targets are much lower than Hendricks. He's talking 107. See, there you go.
No, I don't mean to laugh. He says 107.
But you do.
No, okay.
You may not mean it, but you do.
All right, okay. Hey, I had 110.
All right, you know what, Glenn? I tell you what, I've never done this. I've done 1,000 interviews, but you win the prize for one of the most disrespectful guests that I've ever interviewed in my life.
Nice, Dale. I'm just proud.
You know what? And you really need to find your spirituality and be kinder to your fellow man. No. And I will never have. Your work is excellent. Okay, it's very good, and you should let that speak for itself.
Okay, well, I don't mean to laugh, but I'm just saying, Dale, the models speak for themselves. Okay?
Anyway, I'm not a psychotherapist. I'm just a trader, and I appreciate you giving us this time. Okay. And I will never invite you back.
All right, that's fine, Dale. It's your decision.
So good hunting to you, my trading warrior brother.
You
Adios.
Too, and God bless you too. Bye, Dale.
Learn who he is.
Bye, Dale.
Goodbye. Okay, guys, that's a wrap.
You're rude.